Well, it's time now for our daily markets update. Well, European and Asian stocks taking the cue from Wall Street then after a record season there yesterday due to the latest interest rate cut. Investors still giddy, but there are concerns over an AI bubble still looming after disappointing earnings this week from tech giants. Jameel Ahmad, chief analyst at GTC, joins us as always. Hi there, Jameel. So markets are clearly happy then with that Fed cut.
Absolutely, Erin. It's what financial market investors wanted to see. And I remember we had that pantomime just 2 to 3 weeks ago where you saw US interest rate expectations shot all the way down from a near certainty of 90% to as low as 30, 35%, leading to a lot of volatility. But at the end of the day, the US central bank gave the market what it wants, which was another US interest rate cut. It was the third consecutive US interest rate cut in such meetings, and it's led to the US dollar falling to its lowest level in close to 2 months. Gold prices are at more than 1 month high, record highs in silver. And I think what investors are taking from this is historically, lower interest rate talk has been very strong sentiment for world financial markets. So what we're starting to see here is a bit of the engine revving for the famous Santa rally. And as long as US economic data, and we're going to keep a very close eye out on next week's monthly jobs report, which is, of course, is late because of the government shutdown that took place in the United States over recent months. But as long as that suggests that the US economy continues to slow down, it will suggest that the US central bank will continue to lower interest rates in 2026. And that's likely to lead to more record highs for sentiment across world financial markets.
And meanwhile, Jameel, some are nervous, though, about the Fed's independence. Donald Trump, of course, expected to announce a new Fed chair nominee soon. How is this all affecting things?
Investors have every right to be nervous because what we are seeing is the returning US president has been very vocal about US interest rate policy and even insulting certain members of the Federal Reserve for how they vote since he returned to office earlier this year. But essentially, we do know that he has more vocal opinions, and over the coming weeks, he's expected to nominate who will replace current Fed Chair Jerome Powell as the head of the Federal Reserve. It's expected to be another ally of the Trump administration, which essentially means that the Trump administration are going to get more influence into central bank matters, which suggests that we're going to see more lower interest rate policy talk. And it also suggests that into 2026, we should continue to see a weekly greenback, which is, of course, the US currency.
And finally, Jameel, investors are optimistic today, but there are still tech bubble fears looming in the background, especially as those sector giants reported some rather disappointing earnings.
Yes, but over the longer term, tech giants continue to actually outperform when it comes to what expectations are on Wall Street. So we don't look too much into particular earnings until we start to see a trend. At the end of the day, what world financial markets and tech investors want to see is more noise about lower interest rate policy, more noise about economic sentiment. And for as long as the US central bank continues to indicate that it will cut interest rates more, and that is then led by other central banks continuing the same type of narrative, there's no reason to believe that investors will sell off on world markets unless we have some sudden pantomime twist when it comes to trade policy or some of the economic policy that the US administration have used this year. But as long as they continue on the same beat of the drum, which is looking at the interest rate perspective alone, there's no reason to believe that world investors and world markets are going to start to sell off.
Jameel.